Gold is skyrocketing, here's why. So let's start with the big one, inflation. When inflation rises, the purchasing power of your money decreases. Think about it, a loaf of bread that cost $2 a year ago might cost $2.50 today. That's inflation in action. And when people start to see their money buying less and less, they often turn to hard assets like gold as a way to preserve their wealth. Gold has been a store of value for centuries, meaning it tends to hold its value over time, even when currencies fluctuate. Another key economic factor is interest rates. When interest rates are low, like they have been for the past few years, it makes holding onto cash less appealing. Why? Because you're earning next to nothing in interest. This can also drive investors towards gold, as it can offer potential price appreciation that you just won't find in a low interest rate environment. And then there's the issue of currency fluctuations. When the value of the US dollar weakens, it can make gold, which is priced in dollars, more expensive for buyers in other currencies. This increased demand can further push up the price of gold. Now let's shift gears and talk about another major driver of gold prices: geopolitical uncertainty. Whenever there's a major global event, whether it's a war, a political crisis, or even a pandemic, investors tend to get nervous. And when investors get nervous, they often flock to safe haven assets like gold. Why gold? Because unlike stocks, bonds, or even real estate, gold is not directly tied to any one country's economy or political system. It's a tangible asset with intrinsic value that has been recognized across cultures and throughout history. So, when things get shaky in the world, gold can act as a kind of insurance policy for your portfolio. We've seen this play out time and time again. The uncertainty surrounding Brexit, the trade war between the US and China, and more recently the conflict in Ukraine, have all contributed to increased demand for gold. Now let's talk about the relationship between gold and the stock market. You've probably heard that gold is a safe haven asset, and this is especially true during times of stock market volatility. When the stock market is booming, investors tend to be more risk tolerant. They're pouring money into stocks, hoping to ride the wave of a bull market. But when the market takes a downturn, investors often get spooked and start looking for a place to park their money that's less prone to wild swings. That's where gold comes in. Because gold is generally considered a less risky asset than stocks, it can provide a hedge against market downturns. So, when the stock market is in free fall, gold can actually increase in value as investors seek refuge from the storm. Chapter 4. Central banks, the Goliaths of the gold market. Now let's talk about some of the biggest players in the gold market: central banks. Central banks are government institutions that manage a country's currency, interest rates, and money supply. And one of the ways they do this is by holding reserves of foreign currencies and, you guessed it, gold. Central banks hold gold for a few reasons. First, it acts as a hedge against inflation and currency depreciation. Second, it diversifies their reserves, reducing their reliance on any single currency. And third, in times of crisis, central banks can use their gold reserves to stabilize their own currency, or even provide loans to other countries. In recent years, we've seen a trend of central banks, particularly in emerging markets, increasing their gold reserves. This increased demand from central banks has undoubtedly played a role in driving up the price of gold. Chapter 5. Supply and demand, the fundamentals of the gold market. Now let's get back to the basics of economics, supply and demand. Like any commodity, the price of gold is influenced by the balance between how much gold is available in the market, supply, and how much people want to buy it, demand. On the supply side, gold mining and production play a significant role. Gold is a finite resource, meaning there's only so much of it in the ground. And while new gold mines are discovered from time to time, the process of exploration, extraction, and refining is expensive and time-consuming. This limited supply is one of the reasons why gold has maintained its value over centuries. On the demand side, we've already talked about how factors like inflation, geopolitical uncertainty, and stock market volatility can drive up demand for gold. But it's not just institutional investors and central banks that are buying gold. Retail investors, jewelry buyers, and even technology companies all contribute to the demand for this precious metal. Chapter 6. The future of gold. Will the rally continue? So, the big question on everyone's mind is, What's next for gold? Will the price continue to skyrocket, or are we headed for a correction? Well, if I had a crystal ball, I'd be a very rich man. But unfortunately, predicting the future of any asset, let alone gold, is a fool's errand. That being said, we can look at some of the factors that are likely to influence gold prices in the coming months and years. Continued inflation, geopolitical tensions, and a potential slowdown in the global economy could all contribute to further price increases. On the other hand, if central banks start raising interest rates more aggressively to combat inflation, or if the geopolitical landscape stabilizes, we could see a decrease in demand for gold, potentially leading to a price correction. The bottom line is that gold is a complex asset with a price that's influenced by a multitude of factors. It's important to do your research, understand your own risk tolerance, and consult with a financial advisor before making any investment decisions. Outrow Gold, a safe haven in uncertain times. So there you have it. We've covered a lot of ground today, from the economic factors driving inflation to the role of central banks and the ever-present influence of geopolitical uncertainty. Whether you're an investor or just curious, this video will give you a clear and simple explanation of why gold prices are soaring. Remember, gold has been a store of value for centuries, and while its price can be volatile in the short term, it has consistently maintained its purchasing power over time. Whether you're looking to diversify your portfolio, hedge against inflation, or simply add a layer of security to your investments, gold can be a valuable asset to consider. As always, I hope you found this video helpful. If you did, please give it a thumbs up, share it with your friends, and share and subscribe for more financial insights. Until next time, take care.